Okay, so the markets are unraveling. They are collapsing as I speak. So what's going to happen next, and what should you be doing right now? So let's talk about it. Okay, Charlie, yeah, I'm all set. Let's get going. This is the Hey Ed YouTube channel. I am your host, moderator, and all-around nice guy, Edward Anderson. I'm not a financial advisor, so do not construe anything that I mention in any of my videos as financial advice. Always do your own research before doing anything with your money. Today, we got to be talking about the markets again. I've been making a lot of market commentary, the past couple of weeks, and I really hope that some of you have been taking my message to heart. If you have, please let me know in the comment section below whether you managed to save some money, or, God willing, maybe even make some money. So I'm going to start out by taking a snapshot view of what the market is doing at the moment. Then we're going to take a macro view and zero in on what you should be doing right now. And then during this video here, I'm going to give a little teaser, a little reveal about a trading program that I'm in that generates 4 to 6% for me reliably every month. Okay, so let's start with a snapshot of what the market is doing right now. Now, I'm recording this on March 3rd, 2025, and there is about 15 minutes left to go in the trading day. So at the moment today, the market is down 300 points. It was down over 500 points earlier in the day, and it's trying to have a little bit of a bounce. So let's scale out a little bit. Let's go back to the 3 months. Okay, now this level right here at this 42,000 level, and right now I'm looking at the Dow Jones Industrial Average, right, was the next available support level that I pointed out to you in my previous videos. Okay, so a little trading lesson here for you, okay? Now, I know a lot of you already know this, but for those who don't know it, it's good to kind of point this out. I'll try to simplify things. Now, I used to be a trading instructor, and this is the kind of thing I used to teach. But let's keep this simple, okay? I'm a technical trader. I look for patterns, and I look for support levels and resistance levels. Because when you're looking at technicals, all these charts is a visual representation of the psychology of the market. You can see in the chart, you can see the 3 emotions that drive the market. You can see fear, complacency, and greed. Okay, so I am going to oversimplify this, okay? So don't give me hate mail in the comment section below. I just want to respect your time. Now, if you boil everything down to its most basic element, the 2 things that traders look for in chart patterns are support levels and resistance levels. Yeah, I know there's a lot more to it than that, but let's keep this a short video. Now, support levels are levels at which a stock, now I used to be an equities trader, so I always say stocks, but this applies to everything. This applies to stocks, bonds, cryptos, Forex, you name it. But essentially, a support level is the level at which a stock stops going down, where you would expect it to stop going down. Think of it as like a floor. Now, a resistance level is the level at which a stock will stop going up. Think of it as a ceiling. I mean, if you were to jump up and hit your head on the ceiling, it would stop you, right? So that's the rough conceptual way you want to think about support levels and resistance levels. So when a stock or the market starts approaching a resistance level, you'd expect it to hit it, right? It would hit its head. So it would pause and then pull back. It doesn't have to. Bear with me here, okay? And conversely, a support level is the level at which a stock or the market would stop going down, and it would have a bounce. So having said that, let me tell you what should be happening here very soon. Okay, so again, we're looking here at the 3-month chart. Now, support levels and resistance levels are created by what I refer to as A's, V's, and channels. And over the course of time, you will develop an eye for what is a good A, what is a sloppy A, and that kind of thing. Well, the most recent significant support level is right down here, this little V right here at the 42,000 level. And the market went right through that level like a hot knife through butter this morning. But now it's trying to have a bounce. Now, support levels and resistance levels are reference points, okay? Things don't always stop on a dime. Sometimes they go a little bit further before the actual action happens, especially if there's a piece of news that kind of, dominates, the market psychology. So this morning, we just went through that important, 3-month support level. So what I would expect to happen sometime in here, maybe tomorrow or pretty soon here, there is going to be some kind of a bounce. Now, if the right piece of news comes out, it could be a very impressive bounce. But a lot of technical damage has been done to this market. So I would expect that whatever bounce we get in here is not going to last. Now, you always judge the health of a stock, of a crypto, of the market by the quality of their bounces. I mean, if the underlying issues of the market are actually strong, then the bounce would be very impressive and it can move up from there. But if the bounce is pathetic, let's say the bounce goes on for a few days and then starts to roll over, that's not a good sign. That tells us that there is no real appetite in the market to do bargain hunting. And I do not think we're there yet. As I said in a couple of videos ago, I showed you the fear index, and the fear index was at extreme levels. The fear index has since come up a little bit, but I don't think we've actually hit the blood in the streets levels in the market yet. And let me show you what I mean. Okay, so yeah, the market has had a pretty bloody couple of weeks here, sure. But listen, see that $45,000 level? At the moment, it looks like we're down very sharply from there, and we are. But let's get things in perspective. Let's go back a little bit. Okay, let's look at the 6-month chart. Okay, you see this double top here, by the way? That's a very bearish sign. Okay, so we just took out this very important short-term support level. And by the way, that's backed up even more by this support level, over here back in November. So this is why I would expect some kind of a bounce very soon here. Could the market keep going straight down from here? Of course it could. Anything could happen. But I'm just telling you what usually happens in the market. I'm just trying to describe to you how markets work, the psychology of the market. But let's look back further. Okay, now this is the 2-year chart on the market. Okay, so again, now this should put things in stark relief for you. So although we've had a bloody few weeks here, in relative terms, we're still very near the high. If you look at this 2-year chart, look at the downside potential in this market. And this is just 2 years, okay? I mean, let's look back 5 years. Okay, by this chart, the real master support level is down here at 20,000. Now, I'm not saying we're going to get there, in a flash crash, but we could be in a period of time in the market that could be where we end up going. But let's go back to the 2-year chart so I can transition into my next point. See this 2-year rally in the market that we've had? This is a fake rally. This is a sugar-induced rally. This rally was created artificially by the Federal Reserve, keeping interest rates artificially low. Because the markets, they love low interest rates. They love free money. So the government, i.e. the Federal Reserve, has been giving the market financial heroin for 2 years now. So this market that we've had for 2 years now, this has been an artificially induced rally of the past 2 years. Well, now we have a new sheriff in town, and he's trying to take us back to normal. Now, what I mean by normal is our new president is trying to transition us from a government-run economy to a private industry-run economy. And in a capitalist system, that's the way it's supposed to be. We have had the government put their thumb on the scale of our economy now, well, at least for 4 years, but really, this has been going on for decades. But transitioning from a government-run economy to a private industry-run economy is painful because we have a lot of sins to pay for. And I believe that's the process we're going to be going through here. We have to go through a detox period. So if you're an investor, if you're a buy and holder, okay, things are going to be very frustrating at the very least for you, for the indefinite future. However, this is a trader's heaven. Traders love this kind of market. They love volatility. Traders can make money in any kind of market conditions. A good trader who is well educated and they're disciplined can make money in any market condition. So for the foreseeable future, like I've been saying in my past few videos, this is going to be a trader's market, not an investor's market, because traders love volatility. Now, I promise you that a lot of, quote, traders have gotten destroyed, probably lost all their money over the past few weeks. I know they have. But that term trader has been used very loosely because there are a lot of people out there who think that they watch CNBC or they watch a YouTube channel and someone mentions something and they go and buy. They think that's trading. That's not trading. That is at best speculating. A professional trader can make money in any market condition as long as he knows what he's doing and he's disciplined. Most people should not try to trade actively. Now, I think that everybody should be a trader. But what I mean by that is the real difference between that term trader and investor is not one of time frame. It's not necessarily a trader doesn't necessarily have to jump in and out all the time in order to qualify as a trader. No, the difference is in philosophy, is in the way you look at the market. You look at the market as a business, and you use the rules of trading in order to extract profits, from the markets. And the reason why most amateur traders fail is because they don't think like a trader. they think that they're being a trader, but they don't have that philosophical mindset. They still have that hopium deep inside. They still have that thought that the market will save them from their mistakes if only they hold on for a little while, and that's going to save them, from their mistakes. That's not trading. That's investing, and that's hoping, and that's not a very reliable way to make money. So I think everyone should think like a trader. Even if, I mean, when I say you should be thinking like a trader, you should have a plan when you get into anything. And that plan should include stop losses and limiting your losses. But unfortunately, as human beings equate taking a loss with failure. And nobody wants to be a failure, right? That's why, most people who try to trade, they can't get over, their ego. And they find themselves turning a small loss into a big loss because they think that the market is going to say, well, I'll get out on the next bounce. Then the bounce comes and they say, oh, I'll get a little bit more. And they never, ever get out. And then they lose a lot more on the trade. And let me kind of drive home this point with an example. Let's take a look at Tesla. Okay, so let's take a look at Tesla. So this is the 1 month chart on Tesla. And no doubt over the past month, it has taken a very nice, severe haircut. Today, it is having a little bit of a bounce. It's up, 4.5%, on the day today after having this nasty sell-off. So it's having, the proverbial dead cat bounce right now. But to make my point, let's scale out a little bit more. Let's take a look at the 2-year chart. Okay, here we are on the 2-year chart on Tesla. And with the exception of a few people very early on here 2 years ago, anybody who bought and held onto Tesla without selling, they are at best even. But most people are underwater. But look at it. Look at the opportunities to make a ton of profits along the way. So investors say, I'm not going to worry about it. I'm going to hold on to it because over time, I'm going to make a lot of money. Well, in the past, few months, you just lost 2 years worth of profits. You have plenty of time to lock in profits. At the very least, reduce your risk on the trade. So that's what investing is. That's not trading. That's investing. Investing is hoping. You can say the same thing, by the way, about Bitcoin. Now, I'm not going to bother you with charts because, let's save some time here. Bitcoin has taken it on the chin. XRP, XLM, you name it. Cryptos, look, when the market goes down severely, cryptos, percentage-wise, go down more because cryptos reside on the extreme end of the risk spectrum. And the markets always sell the riskiest assets first. Now, do I think that Bitcoin eventually is going to be worth $1 million a coin? Yes, I do. I don't know whether I'll see it in my lifetime. My kids will see it in their lifetimes. But Bitcoin could absolutely go down more from here. Matter of fact, I expect it to go down more from here. So you have to kind of decide, what you're comfortable with. Just don't confuse trading and investing. If you're holding on to Bitcoin or if you're holding on to XRP, like I bought some for my grandson, I bought some XRP and I gave it to my son. Just forget about it. Just give it to him on his high school graduation. That's going to pay for college. Okay, that's one thing. Okay, but I put that moniker on it. That's an investment. That's a long-term hold. So I did not buy that for my grandson as a trade. I bought it, for his college education. That's a big picture, item. So since I think that most people should not try to trade actively, find someone who can do it for you. I'm in a program that I can refer you to. I'm going to be doing the group Zoom calls in the Hey Ed WhatsApp community this week and next week on this program. If you'd like to attend that Zoom, send me an email. I'll send you a link for the Hey Ed WhatsApp group. We'll get you into the group and you'll be notified when the Zooms are going to take place. And we'll describe that program to you entirely. I cannot mention the program in a YouTube video because there are rules against it. But I can tell you that I've been in that program for about 8 months now, and it has been returning 4 to 6% a week for me, like clockwork, regardless of market conditions. This program is especially attractive for people who reside outside of the U.S. I got a huge worldwide audience out there. So, so if you're outside of the U.S., it's even better for you. But I'm in it, and I'm in the U.S. So if you're frustrated with your trading, this is an option for you. Find a good trader, and I can refer you to this program that I'm in, and I love them. And I'm just now starting to share this project with my group more aggressively because I've been in it for 8 months. So I've got a story to tell. I can not vouch is kind of a strong word. You don't want to vouch for, for anything. But this is a trading platform. There are no guarantees, but I can tell you that they, on a very regular, steady basis, return 4 to 6% a month for me. So take that for what it's worth. Very interesting times. This is going to be a very fun environment for traders. For you investors, buckle up. The markets don't always have to go up. Okay, they can go down. and they can go down a lot, and they can stay down for a while. They don't always have to go up. And I think we are in a period of time here where we are going to be resetting the psychology of the economy and the markets in a very dramatic way. And that process is necessarily a painful one, especially since we're coming off of several years of mismanagement by our government. Okay, so if you're still here, thank you very much for supporting my channel. Please like and subscribe. Ed Anderson, live from Minnesota, signing out.
Copy that.